Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 2nd of September, 2023, and it's the weekly technical analysis for the Euro, Cable, and the Aussie dollar for the second week of September. And across these three majors, there's been just consolidating, initially climbing up against the US dollar, before faltering towards the end of the week on Thursday and Friday, with the Aussie dollar doing better than the Euro especially, and only falling on the Friday, attempting to recover some more. So we'll see what happened to the US dollar with this after initial dip for the US dollar against the majors, but then it managed to recover against the majors the last couple of days. And the main drivers last week was just the inflation numbers, PCE, and also some US data as well. So and then closing with the non-farm payroll data on Friday. So let's review what happened last week and take a look ahead for this week with upcoming RBA rate decision coming up. Let's review what the main fundamental drivers were for last week with focus on inflation, and then finally on the NFP report from the US on Friday. I didn't add the consumer confidence on Tuesday, but looks like it did have some impact on the price action for the US dollar with a surprising lower figure than expected. And this triggered the US dollar lower. And against the Australian CPI, which also dipped lower than expected. So this gave some hope that perhaps the RBA will also hold their interest rate for next week, which they already surprisingly did the last meeting in 1st August. And then on top of that, the US preliminary GDP also came out lower than expected. So this kept more bearish pressure on the US dollar. And the Eurozone, they did have a higher than expected CPI. And this will have some impact on the ECB's decision in a couple more weeks for their rate decision. And then eventually on the Thursday, this was the key one for the inflation numbers. PCE price index maintained at 0.2%, and this still gave some concern, and this gave some recovery to the US dollar. Although the initial part of the week, they showed weaker numbers for the US economy, and it could sway their decision also in a couple more weeks with the Fed, where they could decide to hold any rate hike for now. They could pause, but we'll see. And then on the Friday, the non-farm payroll came out slightly higher than expected, but did not cross the 200,000 mark. The other elements were like the hourly earnings came in lower than expected, which did help the report that the jobs outlook could be slowing down. And as well, the unemployment rate climbed up unexpectedly to 3.8%. So that also helped to give a more softening impact on the jobs side, which may also help to sway the Fed's decision. And then surprisingly strong manufacturing PMI figure came out an hour and a half later. And this helped to boost the US dollar further to recover after initial dip in the first half of the week. And we'll see that in the charts later on as well. But looking ahead for next week, we've got the RBA coming up with their rate decision first for this month. And they're expected to maintain at the 4.1% forecast, and which they held as well in August. This was August forecast, August decision. So they could also continue to hold. The expectation is just to hold and pause. And this lower CPI figure could also help, and also softening in their jobs report as well. And following that, the Australian GDP forecasted to grow slightly higher than expected quarter over quarter. And then on the US side, the only key news for the US economy this week is just the services PMI. And is forecasted to stay around the same level, around 52.5. So we'll see if that is going to maintain. So let's see if this week the charts will show whether the price action, there will be a continuation recovery for the US dollar after initial dip, but then finding some support. So let's move back to the analysis. Let's begin with the euro. Initially, with the weaker US data at the start of the week, it took advantage and attempted to recover. But however, it after hitting the resistance, and then Thursday's PCE price index data came out, and followed by Friday's NFP. Initially, the NFP was mixed, so it did attempt to climb up higher, but then gave it all back and fell back into a critical level now. Close below the daily 200 and the 108 round figure, and sitting on the 138 fib extension. So there could be a bearish continuation move follow through next week, and could target the 107 support zone and the 162 fib extension. So that's the precarious nature now for the euro, and it did try to climb up above the daily 55, but then was restricted next day, and after testing this previous swing low at the 100 fib. So this is still major resistance above. This is now a bit dangerous, and support is still at the 107, but it could be a likely target this coming week. And if we take a look on the weekly time frame, that's a very bearish close after initial upper wick to spike through higher, but was a rejection. So that could mean further bearish momentum. So this is critical now for the euro, and the only news will be US related, and it will depend on the services figures. And then following that, the following week will be the ECB's turn to decide on their rate decision. Okay. So this is still, we can move the interim resistance up to this level now, between the 55 and the previous swing low here. Okay. So let's compare this with the US dollar index, the DXY, to see whether it's also inversely correlated and giving a V-shaped recovery for last week. And this is the DXY, and indeed it is almost an inverted mirror image of the euro. After dipping lower, finding support, the support zone at the daily 200, and recovering the last 2 days of the week, attempting to climb back up to test the 104 round figure. So let's move this out of the way. This will be interim resistance now. And still the key resistance zone up at the previous swing high of this previous drop. And now it's attempting to recover all the losses over the last 2 months in June and July, 1.5 months, and then recovery since then. Key support is confirmed at this daily 200 and the 50% FIB here. There could be interim support here, but we'll leave it for now. So yeah, we'll leave the FIBs as it is for now, and take a look at the weekly time frame, and that's the bounce, a retest of the 62 FIB, and bounce back up, trying to push above the 104. It's attempting to retest this swing high, and if it does break out higher, then that's a significant breakout, trying to get to the 105, which is a critical resistance at since the start of the year. Okay. Yeah, we'll leave the FIB as it is for now, until there's a clear breakout of sorts. Now, the danger is also that once it comes up to test the resistance, there could be a double top, and it could also falter and reverse lower with the Fed decision. If they do hold and do not increase rate and pause, then there could be some hope for the markets, where they could celebrate in the short term. So that's a potential danger with this resistance zone up here. With critical news coming up, not this coming week, but the following week. Okay. So let's move back to the other pairs. Moving on to the cable. And similar to the euro, climbing up the Tuesday, Thursday, and then faltering and almost giving everything back last 2 days. Did not fall to the previous swing low like the euro, but it's still fairly bearish and attempting to target the 38 fib, and if that breaks, then the daily 200 and the support zone at the 125 and the 21 fib retracement is in danger. Let's take a look on the weekly time frame, and yes, similar to the euro as well. It did pull up to test and then got rejected and fell back down, and that was did quite get to the almost retested the lower channel trend line. Yeah, it's almost there. So that's still a major resistance zone. We can move this lower now to interim support at 38 fib. And the major support at that zone between the 124.71 and the 125. With the daily 200 sitting right in between. All right. So critical week as well for the cable. See whether it follows the euro. And depends on the US dollar price action as well. And no major news from UK economy. It's just exposed to the US services PMI. All right, let's continue to the Aussie dollar. And the Aussie dollar will be exposed to the RBA rate decision on Tuesday. So that's going to be a critical one this coming week. And it did also attempt to climb up higher, trying to break above 65 round figure, but was brought back down. And it did attempt again on the Friday with the mixed result from the NFP. It did attempt to climb up higher, but failed at this double top. Now let's see whether there's going to be a consolidation. It could continue lower to test this, either this 162 fib or a lower trend line, and then consolidate. Still between the 64 and the 65. Figure. So this is now a critical support zone. So interim resistance and a major resistance at 66, and this swing low area here. Okay, now we still have the two fips, major one from this swing and a minor one from this reversal fib. And I think we can just update to the latest one here. Let's take out the, let's use this one now. And let's leave it for now and use this as the reversal fib retracement and climbing up. So now it's between the 138 fib and the 162 fib extension, which is also close to the 64 and the 65. And we can also add a channel here. And see if that will hold and provide some support down just at the 162 fib. If that breaks, and the danger is going to move down to target the 200 fib extension at the 63 round figure. So let's also check the weekly time frame. And it's not as bearish as the euro or the cable, so it's still opportunity to just consolidate within this channel. And unfortunately, this channel does look like a bear channel, so it could be also a danger in the future. Okay. So yeah, critical time for the Aussie dollar this coming week with a couple of key news and US news as well. So you have to watch the price action. Okay, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.